The first ever Gold Investing Handbook for Professional Money Managers has just been released by the World Bank, a move that could further improve the metal's visibility on the world stage. Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe and we'll keep you in the know. For years, growing central bank demand has been cited by economists as a fundamental reason why gold could regain a more visible role in the worldwide financial system. In just the last 5 weeks, gold has climbed 15% to more than $2,300 per ounce, a price level never before surpassed in history. This recent demonstration of price durability is not an exception. Gold has been resilient for years. How far could this gold bull run go? We don't know. What we do know is that gold has risen more than 700% since the beginning of the current millennium. Analysts credit much of gold's resilience over the previous 2+ decades to significant support from the world's central banks. For the last decade and a half, since the global financial crisis, central banks have been net purchasers of gold every year. The implications of long-term central bank gold demand have prompted some analysts to conclude that we could be seeing gold return to greater visibility in the global financial structure. Gold has regained a solid yet unofficial role in the world's monetary system. Money managers may be joining central banks to drive gold demand. One sign is the World Bank's decision to release its first ever gold guide for institutional investors. The guide is titled The Gold Investing Handbook for Asset Managers, and among its features, the manual reiterates to professional investors the long-standing and traditional benefits of gold, saying in part, "In the modern era, gold continues to play a critical role in the global financial system, serving as a hedge against inflation, a safe haven asset, and a reserve asset for central banks." The handbook goes on to summarize some of the more profound economic and geopolitical challenges over the last 15 years that it says illustrate gold's merit as a traditional store of value during periods of uncertainty. Sprott Asset Management separately found that over 7 crisis periods dating back to the global recession, gold outperformed other popular mainstream assets, rising an average of nearly 13% during each period. The World Bank also stresses gold's unique lack of counterparty risk, a feature highly prized by central banks. Gold has no credit, default, or political risk, conditions that no other traditional safe haven asset can offer. As it turns out, many professional investors already may be ahead of the World Bank in embracing gold. Every respondent to a Bloomberg poll of professional money managers conducted last year said they expect to maintain or raise their exposure to gold in 2024. For the last decade and a half, central bank gold demand has been effectively pushing gold's price. Will the world's largest portfolio managers start lending a hand? If they do, this could be another driver pushing gold price higher and higher. That's why I suggest you take the time to learn more about what's really going on in the economy by attending our exclusive one-on-one web conference at AugustaPreciousMetals.com/webconference.